Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, it's time to catch up on Bitcoin, and this video is probably going to take a while, but don't worry, I'll timestamp it. We're going to try and cover everything today and bring everybody up to speed with what I'm thinking. But first... Okay, do you want to learn Elliott Wave theory? Well, if so, consider joining the Green Star Trading Patreon for just £10 a month at Tier 2 or £15 a month at Tier 3, and you will get access to this 11-part Elliott Wave series teaching you Elliott Wave from scratch in a really simple and easy to follow manner. And you'll also get access to my Deep Dive series, which shows you how I apply Elliott Wave from scratch on a new asset. Also the My Chart series, which is still ongoing and shows you all of the various tools and indicators I use on TradingView and how to set them up, and also my trading playlist where I show you how I use my method of the standard trade setup, what I call the STS. I also cover some trading psychology, risk management. There's also a whole host of educational materials available on the Patreon as well. And that's just the content, guys. There's a lot more to it than that. If you actually do become a member at Tier 2, you'll also get access to the public Discord where there are hundreds of members discussing ideas every day. You'll also get access to the weekly live streams where you're pretty much allowed to ask me anything within reason. And if you want me to cover a certain asset, I'll look at it for you. If you want me to even look at your own work, your own Elliott Wave work, I'll dissect it and look at it for you. These things often go on 4, 5, 6 hours sometimes, and we have a bit of a laugh as well, and you're free to ask me anything you like within reason. If you want more than even that, though, you can join Tier 3 for £15 a month, get everything I just mentioned, but you also get access to my monthly dividend calendar and stock raising system, which looks at high quality stocks with good company health, good value, paying a good yield, worth holding, and that's for the investors out there rather than just the traders. Now, if none of what I've just said, the videos, content, the Discord, the live streams, the calendar, all those things, if they don't appeal to you, and you just appreciate the work I'm already doing on YouTube and want to support me, you can pay us £5 a month and still bag yourself one exclusive video each week. Alright guys, thank you for listening. Now let's get back to the video. Okay, welcome back guys. Right, we have got a lot to talk about today here in Bitcoin, and I'm going to timestamp the video so you'll be able to go back and watch it at your leisure. You are going to have to put up with me waffling a bit because there's a lot to cover, and essentially I've had to have a reshuffle, and after spending a fair bit of time, as you can see from the subwave count here, really cracking on and trying to figure out what's going on, the recent price action with the breakdown we've had has helped clarify things a lot and give me a lot more conviction in what I think is going on. We had a very torturous sideways period here for a while. I think we all instinctively suspected that it was corrective and would lead to lower pricing. There was a motive interpretation for it, which I shared in a recent live stream, but I think we all agreed that it was ugly as hell. I caveated it with the fact that I felt it was extremely unlikely. That has now been proven the case. So with that comes certain things which have changed, certain things which have been stretched to a point where I no longer consider them to be the most probable scenario, and therefore we have to reassign things, look at our alternate counts and our primary count, and rebalance things into what we consider to be the most probable outcome. Okay, so I think we should start by backing away from all of this small time frame count here that's cluttering up the chart, and we'll come out to the day time frame, and that automatically gets rid of a lot of the smaller term count, which is only visible on smaller time frames. But actually I'm just going to clear the chart completely so we can talk in a very simplistic manner about what we've been considering in the past and what I think has changed and what I think is more likely now. I think that would be the most helpful thing. So this may clear things up for people and maybe all they're interested in hearing, in which case that's fine. We will come into all the detail as well, of course, but one thing at a time. Okay, so let's retrace our steps a bit and look at what was the primary idea for the longest time. Okay, starting from the December 18 low, we were talking about this being 1 and 2 and then 3, a flat pattern of some sort, into 4 and then up into 5. Now this is still a possibility, but given the structural issues with the count, The biggest being that this, in my mind, has often subdivided as a 3. However, this has definitely started to, in my mind, subdivided as 5. And being as it's this 5, this can't be 3, 3, 5 unless it's a flat pattern. It's not. So this has to be 5, 3, 5, or this has to be 3, 3, 3 and deeper. Okay, at which point the idea of it being a wave 4 has got to be less likely in my mind, and more likely that this is a single correction in itself. Now, I'm not writing this off. We have just simply downgraded the idea to an alternate count and bumped up what was the alternate to primary, which I introduced the alternate a few weeks ago. Now let's just look at some evidence here that I want to bring up. So, which channel have we got here? The long-term channel taking the wave 1 to 2 pivot and 3 to 4 has now been broken in log scale. Now, prior to that, we had a pitchfork we were using to establish what we felt was going to turn out to be the primary pivots, or the intermediate pivots in this case, of 1, 2, 3, 4. Now, that was the first thing to break, and as we can see, if we just turn off the channel for a moment, we can see that this pitchfork did play out in terms of providing support and resistance the whole time. It just didn't do what we were expecting it to do. So, as I pointed out multiple times, between the levels of 61.8, the 23.6, the median line, the 23.6, channeling between the two here, and channeling between the 38.2 and the 61.8, we can see that we kept testing all these levels until finally we broke it, and then we did a perfect back test of it as well, and then rejection. So, this breaking down, I think was one of the first daggers in the side of the idea of this being the perfect pivot for a wave 4, and it didn't come about. When we had the possibility of talking about a triangular pattern and pivoting off of the golden ratio here, that looked pretty sound. That then broke, and then the pitchfork broke, and now, given enough time, the channel has also broken. With the depth of the wave 4 correction now, it's still valid. The invalidation point is back here at the top of the 1, so we're a long way off invalidating this idea. I just feel that the structural issues I've had with trying to get this to be an expanded flat and not getting a clear 5-wave move that I can count, especially with the disparity in these two legs here and their substructures, just leads me to believe that if this is the case, it's more likely a combination we were dealing with, and it's going to actually be deeper, in which case the invalidation point will come into play at some point. So I find the idea of this actually having been the top, this is an idea I was quite reluctant to accept, and I will freely admit it. I'm not particularly happy with it, but everything since makes a lot more sense if we consider the 70 grand high to be the top. And therefore the alternate count, which I will express in simple terms, which was the idea that this was 1 and 2, and this was 3 and 4, and this was 5 into a 1, and this is all a subsequent zigzag, hence why it's broken so much of the assumed structure of a wave 4 that we were expecting. First of all, the triangular idea we had, then the pitchfork, then this channel. Now, it could still turn out to be the case that it's a wave 4, but I feel that given what we've witnessed, this is now more probable, and therefore this is now the primary idea, that we've come up in a 1 and this is a zigzag into a 2, and then we're going to go 3, 4, 5, much higher. This actually brings things into line with a lot of what we've been expecting in the altcoin market, with a lot of our counts also being 1s into 2s. So perhaps the idea of some assets being in wave 4s and some assets being in wave 2s is actually incorrect. Perhaps we're all in wave 2, but at different wave degrees. That's one of the things we can consider when looking at altcoins in the future. But for the moment, that's the simplest way of expressing these two ideas. Okay, that this is a primary wave 1 top, as opposed to the B wave of a 3-wave flat in a wave 4. Okay, so let's now zoom in a little bit, and we'll make sense of the price action from the high to fit our new primary count. First thing I want to bring up is a corrective channel here. So we're channeling very nicely. Another reason why I think we're approaching a low. Okay. Point to point to point to point to median line to the bottom of the channel again. We also have a pitchfork here that we're using a modified shift pitchfork, which also channels nicely. You can see how we snagged around the 38.2 level of support and the 61.8 before breaking through the median line to the outer bound, back testing the median line but bouncing along the 38.2 first, back test it, and now breaking through both, probably heading for this confluence level, edge of the channel, edge of the pitchfork. Okay, now if we shift the pitchfork into a original pitchfork for a moment, we can see how you could also argue that it's an original. It doesn't seem to bounce amongst the levels as neatly as it does when we're looking at it as a modified shift, but we can see how the median line has been pierced, and a retest of the median line, somewhere in the region of the retest of the median line and this channel and the outer bound of that modified shift pitchfork all tend to point towards the confluence level being somewhere around here in terms of structural support, okay, and channeling support. We also have a longer term channel to look at, which is our base channel. Now interestingly also, this base channel is sat pretty much in the same area. So we have the top of our 1, bottom of our 2, and the 2 previous lower pivots here. The bottom of the mark in 2008 and the bottom of the 2 projected forward from the top of the 1. We come through this little snagging point here. Okay, there's a little bit of a resistance, we back test it. That could also be a piece of confluence. So when you add it all together, you've got corrective channeling down here. You've got that pitchfork we were just looking at down here, or the median line of the original, and you've got a little bit of prior market structure. It's not particularly strong, but it's there. Now we've got a lot more around the previous high. So if we just take that level there, and then we take the level here, you've got a zone around the base channel, around the long-term channeling here, because we don't know if we're going to come down, we're going to bounce again, and then come down a little lower, right? We could have a down, bounce sideways for a bit, come down a little lower, bounce sideways for a bit, come down a little lower, and continue to channel and extend this last move down. All of that's possible. So there's an area of confluence that's building up for this corrective move to complete. Base channel, bounce, median line, so on and so forth. Okay, so we've looked at those. That's some geometry to support what's currently going on. So now let's actually come in and look at the count. And the only bit we're really interested in, if we just do a very quick summing up of what I think we're looking at here, I said a free wave correction, a sharp correction, A, B, C. So it's either going to complete soon or a little bit further to go. This could be 1 and 2, a 3 and 4 to come, and a 5 to drive us lower, right? It kind of looks like a 1 and a 2. It could also be most of the way done already, and the subdivisions breaking down because of how violently it's accelerating. You know, we see that in these kind of moves prior. We've seen one here where we get these sudden bursts, sudden down, waterfall moments, and the subdivision internally is awful. Okay, so if we're subdividing this as A, B, C, and we're seeing this as 5 now, we have to view this as 5 as well. So it's 5, 3, 5. There's no 3, 3, 5 pattern which doesn't retrace at least 90% for a flat. Okay, if this is a sharp correction, it's 5, 3, 5. So whatever we come up with here, and I have come up with something, we have to live with it. It's that simple. Right, so whether we want to go 1, 2, 3, 4, 5, 1 to here, flat correction to here maybe, 3 to here, which I think is logical, 4, and then 5, there's no overlap of the 4 over the 1, the 3 is not the shortest, or the subdivision's terrible, and we get 5 waves down in the 5th for an A. 3 into a B, 5 into a C, and that's going to be the zigzag complete as and when it comes. So let's now bring up we're on the daily time frame. We're going to want to introduce that and come down to the smaller time frame so we can see all of this. Actually, let's come all the way down to the hourly time frame. Okay. So the way I have the count subdivided so far for its 5 wave move down is we have 5 into our minor 1, flat 2, diagonal 1 to minute degree, 3, 4 and 5 down to minor degree, And then it gets very, very messy, which was this sideways move here. How I managed to subdivide this. I'm sure there's a multitude of ways you could do it. So let's look at how I pulled it off here. So this is literally something we could argue about forever. So I call this sideways shit. And when you're in this kind of mess, and it's untradeable, essentially, this kind of sideways ranges. This is why during last week's live stream I was reiterating the point, which is, look, it will tell us what it is when it finishes what it is. We suspect that it's corrective because forcing a motive count was very difficult, okay, in terms of believing that a sustainable low was in place. So we can look at it as a WXY, but we can look at it as an ABC. Now I've gone for the ABC count here because the structure at the end of this count looks like an impulse to me. Alright, so let's come down even to the 5 minute and dig our way through this. I look at this as a believable 5-way structure. Now you could look at this as W, and then you could look at this as X, and then you could look at this as Y, and we can still get into a 4. So let's not get our panties in a bunch. Alright, there are multitudinal ways of doing it. It's a way 4, it's a sideways load of nonsense, and this is how I've done it here. Diagonal 1, 2, impulse 3, 4, 5 to complete an A. No overlap of the 4 over the 1, subdivides fine. From there we get A, running triangle B, C for a W, A, running triangle B, impulse for a C to complete an A of a triangle. So our first move is at subminuet degree, A, B, C into minuet degree, and then we get micro degree into subminuet A. So this isn't W and X, this is W, and then A, B, C, D, E, contracting triangle, minuet, X wave, A, B, C, completing minuet Y to get minuet B. Okay, from there, 5 waves, 1, 2, 3, 4, 5, minuet C, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, subdivision within the 3 looking nice, into minor 4. From here, get an impulse, 1, 2, 3, 4, 5, down into minute 1, W, zigzag here, A, B, C, flat for our X wave here, contracting triangle for our W here to complete the 2. Oh, you can't have a triangle in the 2, Tom. It's not a triangle, it's a combination. WXY, triangle simply makes up the Y wave of the combination. So the 2 is not a triangle, it's a combination. So there you go. From here, subdivisions accelerating. Now we can subdivide this as an ever-growing extension, and it is really anyone's guess here at the moment. I have this. You could try and get this here to be a 1. Now I think that's bullshit, because this is 3 waves all day. It's not a 5. It's not an impulse. And you know, if I can't see it in the line chart, then it ain't there, and it ain't there. That's 3. Right, so I can't see that as 1 and 2 myself. I'm not saying it's impossible to count it. Maybe you can find something, but I can't find it. So the idea of looking at this as, you know, 1, 2, 1, 2 doesn't work for me because I can't get an impulse in here. So I look at this whole structure to complete the Y of the 2. From there, I can then get down into 5 wave impulse, and I can see it in here. 1, 2, 3, 4, 5 into a 1. A, B, C, running flat for a 2. Okay, I think running flats might be less common, but I prefer it over trying to count that as an impulse. Right, from there, 5 waves down into a 1, into a 2, and then from there, a further 5 waves down. Excuse me, I've zoomed out a little too much. A further 5 waves down into a subminuet 5, into a minute 3, into a minute 4, sharp correction in the 4 here, flat correction here in the 2, alternation between 4 and 2, and then from here a rush down again in 5 waves, and we're still unfolding. So this is going to find the minuet 5 sooner or later, and that's going to find the minute 3, and then we've got a minute 4 to come in, and then we've got another move down in minute 5. Okay, wherever that's going to take us. I've got it all the way over here. I think that's a little extreme. And this is probably going to bring us into all of that confluence, right? Somewhere around 20k. if we continue to subdivide. Now this could be coming into the low, right? That's possible, but as I pointed out, we come into that low of that channel, right? But then we can move sideways in the 4, and then we can come back to that channel, and we can come down lower into even more confluence. Until you get 5 out of here or out of here, you just don't know what you're dealing with. You're still heading down, the trend is still downwards, so I'm going to keep subdividing it bearishly. Okay, let's just save the chart. So that's the primary count explained, and now let's just zoom back out to the day time frame where all of that minutiae detail is going to disappear, and run through it very simply again. The whole thing is a zigzag. We are in the 5th wave of the zigzag. I suspect that minute degree 3 that has not yet completed. That will mean minute 4 and minute 5 to come, taking us lower, and we will continue to work within this corrective channel. So if this is 3, 4, 3 to here, 4 can bring us to here, 5 can bring us to here, right? And we can get ourselves lower and towards all of this prior structure. So we spoke about the all-time high. Okay, we've got the all-time high, we've got this structure here, we've got the confluence of the channel, and we've also got the base channel waiting here. It's all kind of in this region. You don't have to come this low, like I said, you don't have to, but there's a lot of confluence waiting for us down here. Okay, so there we go, that's the primary. Now let's have a look at what was the primary that has now been downgraded. Okay, so we are going to have to remove the long-term count for a moment or readjust it. The alternate, if I want this to remain as a wave 4, okay, this is the only way I can get it to work, I think. I can't get this to subdivide, you know, as the simple 5-wave structure of a flat pattern. You know, we're going to have to just live with what we've got for the meantime. So, a corrective structure going deeper. Now the cutoff point for this is going to be, let's just find our vital levels here for a moment. Levels, invalidation point 13,880 spot 00. This is the invalidation point for the wave 4, so the 4 can still come deeper, and we would be looking at this as a combination. Okay, A, B, C flat, a zigzag to extend the X. It's not a double zigzag, so there's no problem with the X being expansive. And then we get a combination double zigzag in the Y. This is one of those things which people are just going to argue about endlessly. Can you have a double zigzag in the place of a single zigzag? I believe that you can, because that's what I see here. Okay, and zigzags, triple, double, single, triple are all classified as zigzags. Okay, they're just not a single zigzag, they're a combination of zigzags, and we call them double or triple zigzags, as we call sideways combinations double or triple threes. Either way, this is the alternate idea. We're coming down in a combination, and I'm going to have to, I don't know why that's there, but I think the only way we can feasibly look at this as a separate zigzag now is extending the A and the B and the C all the way down here. Feels forced. I'm not saying it's impossible. C can be extended, but I think perhaps we could be actually looking at an extended A, B, and then the C could be short and have an extension in the A. Either way, the parity between the two is off. Now, they only tend towards parity, they don't have to, which is why this counts now an alternate. I struggle to get anything else into here that I think looks right. Now, let's now look at what was the primary. Okay, that's now been downgraded to my second alternate here, and that was the idea that we were looking at a ending diagonal, right? A, B, C into here, A, B, C into here. While the 3 was potentially here, and we were tracking higher, right? So we were going dum, bum, bum. That was my preferred count. The breakdown to here has now pushed that C to a point where I'm finding it a little too hard to believe. I'm not saying it's impossible, but the room we've got to get back above into the wave 1 because we'd have to have an overlap for our diagonal, and then we've got to come down to get a 5th and stay above the invalidation point while simultaneously achieving shorter waves. We're getting closer and closer to making that almost, well, not impossible, but it's getting harder. And if we continue to head down lower, getting all the way back up into a 4 in a zigzag, which transgresses into price 1 territory, which a diagonal has to, is going to get more and more difficult. So I feel like I've got to downgrade that, and that's why I've done that. This recent breakdown has flipped that on its head. Now you might say, oh, well, you seem very confident in this. Well, that's how quickly things can change. This looked like it could easily work its way up to here and give us that 1, 2, 3, 4. But it hasn't. It's broken down instead. And that, for me, has clarified the situation, suggesting that this is less likely. I also now consider it less likely than what was our second alternate, which is that this is a double combination. All of which are less likely, I feel, than this is just a zigzag. 1 into 2. So that's the Elliott wave count. I don't think there's anything else really for me to pick at here, not unless we go through the smaller wave degrees of the alternate counts, which I don't think is really necessary, as it's still 3 into 4 into 5. The difference is I extend this as a further ABC. So let's do that then. Let's look at the combination idea, which is now our official alternate. So I said I don't like A, B, and a massively extended C. I've gone off of that. I won't accept it in my primary as a likely count, so I shouldn't accept it here. So what I see is 5. Same as our zigzag, but that now becomes our A. Then we have a B, then we have a C. Okay, to come down and get our, well, we're in, what scale are we in here? We're in arithmetic scale, aren't we? So that brings us to the C, to the Y. Okay, and all of this would have to happen, excuse me, prior to the invalidation point. Now the C doesn't have to be long, the C could just be enough to clear the A, but when we look at the structure, if we come down this deep, even though it's potentially a legal wave 4, it doesn't really look right anymore. Okay, at which point the idea of it just being a deep primary correction fits better. Okay, and that's just one more nail in the coffin, I think, of the alternate count. Right. So let's now zoom back out again, and let's now do some classical analysis, because I'm worried that I'm just going to go over and over and over the same ground. Primary count. We completed the primary wave 1, and we are in the process of retracing into a primary wave 2. Wave 4 was over here. And as you can see, when we look at it in linear scale, it's more believable now as a zigzag. Ever since that pitchfork broke, that long-term channel broke, and my triangle idea broke, and this has continued to push lower, each time it's successfully pushed lower, it has undermined the idea of it being a wave 4. So I'm going with the idea now that it is a wave 2. It could be very close to completion. I personally have it as minute 3, 4 and 5 yet to come for minor 5 to complete intermediate C of primary 2. So we could still have some way to come. The invalidation point for this count is all the way back at 3, 1, 2, 2 spot 2, 8. So before this becomes impossible, you've got an enormous collapse. Possible. I'm not saying it will do that at all, I'm just saying that's the official invalidation point given Elliott wave rules. Right then, let's clear up the count, and now let's do some classical analysis and look at some indicators. Actually, before we look at our indicators, let's just look at some extensions and retracements here with our Fibonacci tools. So if we come to let's come to the daily time frame for a moment, and we're just going to come off of log scale, and we're going to look at the retracement in linear measurement. So from the high, if I can get it, and we're going to assign this as wave 2, we can see that we've come through the golden ratio. This was providing support, 61.8. It's now given up the ghost and fallen through. The next target is here at 78.6, which is 17,500 or 17,792. This completes the idea of it being a deeper nesting structure that will come into the prior 1 and 2. actually strengthening the case of it being a 1 and a 2. It also finds prior market structural support around this little area here. Now, I mentioned in a live stream recently talking about using Fibonacci tools in log and linear scale. Now, I am not saying you can't use Fib retracements in log. Of course you can. Algorithms use them, so we can use them. When I said that a retracement, a Fibonacci retracement, is an arithmetic calculation, that's the truth. That's a fact. So if you want to know what a 61.8% retracement of 70,000 is, you need to know the result arithmetically, because that's a mathematically provable, calculatable fact. But a 61.8% retracement of 70,000 is not a logarithmic measurement, it is an arithmetic measurement. Okay, so linear scale retracements are the only true Fibonacci retracements. However, the same is not true of what algorithms use as potential support and resistance. That's a definite possibility. And also with extensions as well. Just as extensions in arithmetic make very little sense in the price skew of the extreme markets of cryptocurrency, where wave-free targets are essentially irrelevant, adjustments for log scale may make perfect sense to an algorithm which knows it's in an exponential market. You see what I'm saying? You've got to keep an open mind. I'm just talking factually. Right. Now, on that note, let's look at this idea of an ABC. We've been talking about confluence, right? We've mentioned our pitchfork. We've mentioned our corrective channel. Okay, we've mentioned our base channel, all providing support down here. What kind of relationship currently exists in log scale between these two legs? Right, accounting for the skew in price from 70,000 down to what could be below 20,000 perhaps. Let's measure it. It's very close to 1 to 1. Very, very close to 1 to 1. So this is another potential piece of confluence. Base channel, 1 to 1 measurement. Alright. Corrective channel. It's all coming into this territory here. Extremely oversold, which we're about to see when I bring up the indicators in a moment. So I just wanted to look at those things as well and just clarify that point about retracements and extensions. Okay, so now that we've looked at some Fibonacci numbers, let's now get on with looking at our indicators. Simple things first. Let's bring our moving averages up. Daytime frame. We've traded around the 250 exponential moving average, which is the green line. We've back tested it 1, 2, 3 times the charm, and we've collapsed down and continued to push lower. Each time we've had a bearish phase below the 250 exponential moving average. Now just look at the structure here and look at the structure here. This and this. If this is a smaller wave degree of this, they're very similar looking. Right, this is longer, obviously, in time, because this is a larger wave degree, so it's going to take longer than this is going to take. But they are looking quite familiar. See, we've got this break below the 250, then below the 60, and then a flush out. You know, test the 250, break above it, come down, move along, and then break down below the 60 and continue to move lower. That's now looking kind of similar. We also did something similar here, move below the 250 as well. Let's come out and have a look at them in the weekly time frame. Now on the weekly time frame, we're touching the 250 exponential moving average as I speak to you now, or at the moment you're watching this video anyway. But on prior larger wave degree corrections, the same wave degree, we've got a piercing of it with two bodies of the candles above it. This was a COVID low, but we actually bodied several weeks below the 250 exponential moving average, drawing the bear market lows of 2018 and 19. Okay, so maybe that's the kind of price action we're going to witness again. Something like this. Like we did here. We could get a V bottom like we got there, but I wouldn't bank on it. If this is a 1 into a 2, it could be a slow grinding process to get out, like it was here. Bum, 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 bum. Okay, let's come back to the daytime frame for a moment. Let's bring up our indicators. Okay, on balance volume heading lower, no surprise there, no sign of bullish divergence. RSI has some bullish divergence between a low and the current low. between these two lows here, but that could easily break down if we continue to push down lower into more oversold conditions here in the RSI. But there is some bullish divergence between the previous low and current price action. This, however, is not a confirmed low, so that's not official divergence. The same is true of the MACD. Here I have a correlation coefficient with the DXY. I think this is interesting to look at because in the Twitterverse, it would appear at least, there's this attitude which is whatever the dollar is doing, Bitcoin's doing the opposite, and it simply is not true. Okay, Bitcoin and the dollar move from positively correlated to negatively correlated, and they can share significant amounts of times positively and negatively correlated. It does not always track that whatever the dollar is doing, Bitcoin is doing the opposite. If that was the case, how has the dollar rallied to new highs from 2008 and continued to climb higher while Bitcoin has climbed higher? They can each go higher together. It's just periods of correlation can be quite significant, and they can be prolonged for several weeks, but over a long term they can decouple or do the opposite of one another often enough to have both progressed over a more significant amount of time. So we mustn't run away with the idea that that must always be the case. Often they can be positively or negatively correlated and doing the opposite thing, even over shorter periods of time, which we can have a look at that in a minute if we come out to the weekly and the monthly. But either way, I wouldn't bet on that divergence at all at the moment. We have no confirmed low here, so we can't really read into that. On balance, volume continues to make lower lows. MACD's a bit more bullish, hanging around the zero bound here. That may well give us divergence if we find a low, but it's going to be probably on its own if it does. Now, let's come back out to the weekly. On the RSI on the weekly, we have done the round trip of overbought to oversold, and we are deeply oversold now on the weekly time frame. In fact, if we look at prior bear market lows, if we go all the way back here to 2011, and we just throw a couple of lines on the chart here, you can see how we're basically testing the same levels on the RSI that we did in 2014 and early 2015 low. We're also testing the same levels we did in the December 18 low. We're not quite there, but we're very close. Now, the market put in major bottoms around these previous levels in the RSI. Okay, so maybe we're looking for support here soon, and I feel that is probably the case. We are getting very extended in this selling now, and even my own subwave count is supporting the idea that it's coming to an end soon. 3, 4 and 5 to come at a smaller wave degree. Okay, on balance volume not really relevant here on the weekly time frame. This overall structure of all of this corrective price action hasn't really done much damage at all to the on balance volume. Is very much a sideways move. Okay, so let's come out to what's the MACD doing? Continuing to trend lower. It's all pointing towards some kind of bounce soon. We're here at the 250 again on the weekly. I mentioned that. Let's look at our visual range. Right, so the big divot in the VRVP here is right at the previous high. Now, I've been saying this recently, where I've been pointing out how that in these areas of no market acceptance is where we tend to find the peaks. Now, the reason is you don't spend much time at a peak, do you? You're there for a flash and then it's gone. And the same was true back here in 2017. We peaked, same day started selling off. So there's actually very little in the volume profile in this area. We have to come down significantly deeper to find more significant market structure and support in the volume profile. Now, it's possible we come deeper, but it's also possible that all we need to do is test structural resistance. We might not even need to do that. Let's come out to the monthly time frame now. Let's just turn that off. We can see how on the monthly, the 60 exponential moving average basically tracks the 250 on the daily. We did have a 10 through 20 cross in the last big bear market. We also had a 10 through 20 cross on the monthly in the previous big bear market. We are very close to doing that now. So if this is another 1 and another 2, maybe we need to do that again. Maybe we need to pierce this 60 exponential monthly and trade through it and below it like we did in the previous big lows as well. There's not a certainty, but I'm just trying to look for similar price behavior in previous wave 2 corrections, and they tend to be pretty deep, pretty severe. Right, now let's bring back up our correlation coefficient so I can show you this, and let's just collapse these other ones for the moment. So yes, there is a stronger extended negative correlation with the dollar than a positive one, but there can be a positive correlation with the dollar for several months at a time, okay, as opposed to just negative. And the negative correlation isn't necessarily 1 for 1. It's down here at 6.68, 0.68, and sometimes it's as weak as 0.36 correlation. We can also see that price movement going higher here, right? The dollar and Bitcoin were both heading up, positively correlated, doing the same thing. Meanwhile, the dollar started trading lower, okay, and Bitcoin continued to trade higher. Then they were correlated negatively together, but less so as the dollar started to rally. And then when Bitcoin started to rally, there was still a negative correlation with the dollar here. That changed as we moved into the next phase up. So as you can see from here, we've got negative correlation while Bitcoin is actually correcting. It shifts to positive correlation while Bitcoin continues to correct. Right? Then we get negative correlation with the dollar's going down while Bitcoin's going up. So we mustn't always assume that one has to do the opposite of the other. They can be positive and negative correlation can shift during the same upward price move and during the same downward price move. So we just, yes, there is correlation there, I won't deny it, but it is not a foregone conclusion that one has to do the opposite of the other. If that was the case, there was no way the dollar could have rallied as much as it has for over the last 14 years. Okay, while Bitcoin rallied at the same time, and yet they have both rallied together over the long term. That wouldn't be possible if there was a 100% correlation, negative correlation between the two, would it? So there you go. Just wanted to make that point before I wrap things up. Let's just come down to the daily time frame again for a moment, and let's just bring up the volume here and see what we can see on the shorter term. Now, another thing we tend to look for, or I've pointed out before, is you'll have a capitulation event, or it's all relative to the wave degree you're looking at, but you'll have an event where the volume spikes and you'll see a big volatile candle like this one here. You often make another low on declining volume, on less volume than you made this initial capitulation move. In many cases this can be an A or it can be a 3, and then the 4 and the 5, or the B and the C, will come on less volume. The final move down will come. That seems to be tracking true at the moment. Now we don't know how much more violent this sell-off is going to get, and we don't even know if the bottom's already in. By the time you watch this, you're going to have a huge bullish engulfing green candle here on the daily, gobbling up all of this. You just don't know. We'll have to wait and see, won't we? Alright then, I think I've waffled on far too long now, and I've basically said everything I want to say. So we're going to finish by doing a very quick summing up. In the simplest way possible. We're going to come out to a daily time frame and remind ourselves what we're saying. So in summary, our primary count is now primary 1 into primary 2. We're in a corrected channel which has a lot of confluence near the lows, but perhaps a little lower. So we think we're in a zigzag and we think we're approaching the lows. That's the primary count. Alternative count, or the first alternate count, is that we are actually going to get a deeper WXY. It could be an ABC with an extended Y, with an extended C, excuse me, in a similar corrective channel, but it could get a lot deeper. If it does get a lot deeper, it's an alternate way of counting the correction from the high. Then we have the second alternate, which is it's a wave 4 that will complete over here, and it will use an ending contracting diagonal to do it, but this is now becoming less and less likely because we have to come back above prior wave 1 territory with a wave 4, and that just isn't looking like it's possible anymore. So that's why that's now the second alternate. That sums up the Elliott wave counts. From a classical analysis point of view, some things that basically we are extremely oversold on the daily and weekly time frames. We're approaching previous bear market lows in the RSI. We're approaching previous extreme trends in our momentum indicators. This suggests, along with the moving averages, that we are approaching a major low. Okay, we are approaching a market bottom. There could be more to come, but as we've seen with all of these previous RSI lows, 250 on the weekly, we can see how this has played out before similarly. Alright then, there you go guys, that sums up Bitcoin for the week. It's going to be very interesting few weeks to come now, and we're just looking for those lows to arrive. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave a comment in the comment section below, and if you're not following me on Twitter yet, there's a link in the description box below to follow me on Twitter. As always, huge thank you to my Patreon subscribers. Your support is greatly appreciated, and if you're interested in joining the Patreon, there's a link in the description box below. Click on it, head over, have a read of the various tiers, and feel free to sign up. Take care of yourselves guys, and I'll be back with you shortly. All the best. Bye bye.